Hey traders, welcome to a new educational video on the channel. Today I'm gonna revisit the tick charts topic. I made a video a while ago which I'm gonna link in the pinned comment of tick charts versus time-based charts. So I'm going to revisit that concept and make an updated version and just give you my thoughts on why I really love to use tick charts to day trade the futures markets, what are their advantages, and how do they compare to time-based charts, which is definitely the most popular type of chart that people use. So we are here. I'm just put a little bit of theory first, and then we're gonna go into some examples. Now, just to note, there are no tick charts available on TradingView. I believe in one of their most expensive premium plans, they're in like a beta version, but they only have a few preset periods. But it is definitely, not something that's available on TradingView. So you will need another type of professional trading platform to use it. I use them on Sierra Charts, but many other platforms have it. So let's just quickly first do a comparison on the most popular types of charts, just the definitions, so we can understand what exactly tick charts are. So if we start off with time charts, time-based charts, this is what most people use. Basically, you have a candlestick with an open, a high, a low, and a closing price, okay? And a new candle is formed after a set amount of time has passed. So if this is a 5-minute candle, as soon as 5 minutes starts, we open right here. Then it probably went like this. Then it did like this. It went up to this point. And then after 5 minutes, it closed right over here, let's say. So that was the formation of this candle. And then after 5 minutes, we start the next candle, etc. Okay? Now, volume charts, I'm not going to get into volume charts. I don't use them, but they're pretty similar looking to tick charts, and they're related, but there's a very important distinction between them to make, which I want to go over just so you have it clear. So volume charts, a new candle is formed after a set number of contracts are traded, regardless of how many trades or transaction it takes, okay? So basically a volume chart, if we have a 1,000 volume chart, that means every 1,000 contracts that are transacted or traded, there is going to be a new candle or bar forming, okay? Regardless of how many trades or transactions it takes. So literally, 4 traders can make and execute 250 contracts each, and then that would form a new 1,000 volume candle, and then it would go on into the next, etc. With tick charts, a new candle is formed after a set number of trades or transactions, regardless of how many contracts were traded in those executions. So with tick charts, all we're measuring is what number of transactions have happened, irrelevant of the size or volume of those transactions. So if we have a 1,000 tick chart, it would take 1,000 different executions for it to form a new candle, a new candlestick. Okay, so we're not measuring volumes total traded, we're measuring total transactions. Now let's go over a brief list of benefits of tick charts. Unlike time-based charts, tick charts show every single price change regardless of how long it takes. This can provide more detailed information about market activity and volatility. It helps filter out periods of irrelevant slow market activity. Tick charts can help traders identify price movements supported by high volume trades, indicating a strong buying or selling pressure. Time-based charts often obscure volume information as they can show the same volume for different time intervals. Tick charts, however, show larger bars for high volume trades, smaller bars for lower volume trades, regardless of the time it takes to complete them. This can help traders spot potential breakouts, reversals, support and resistance levels, and other price patterns that may not be visible on time-based charts. Tick charts are most effective to use during periods of high volatility and volumes, such as, for example, if we're talking about futures market like SP 500 and NASDAQ, ESNQ. The best times will be trading at the New York Open and then also towards the end of the regular trading hours is a good period that I like to trade. Tick charts help give earlier entry signals because with a time-based chart, you may be waiting for that, 5-minute or 1 minute, whatever it is, candle to close for confirmation, whereas a tick chart can already show you a pattern earlier. It's easier to identify price patterns and market structure, and you can easily decrease or increase the tick settings to compensate for slower markets or, for example, extended trading hours and for high volatility periods. So if I'm trading the regular trading hours, the New York Stock Exchange open on the ES on the SP 500, I'm going to have a higher tick setting because I know there's going to be a lot of volatility especially during those first 2 hours that the market is open. Whereas if I'm trading extended hours, like at 8 p.m. at night Eastern, I know that the market is going to be a lot less volume and activity. So I'm going to set it at a lower tick setting so I keep getting more candles printed in that sense. Okay, so now that we've covered theory, let's go and let me just get this out of the way. And let's go and analyze some charts, time-based versus tick, and we can compare the advantages. Okay, so here we are in a chart on the SP 500 futures March 2025 contract in Sierra chart. And let's just go over how different the charts are going to look based on the time of day and the volume and volatility that we have in the markets. So in a 5-minute chart right here, this is an entire futures trading day. This is 23 hours a day, but remember we have 2 sessions. So we have from here to here, this is extended trading hours from 6:30 p.m. Eastern to 9:30 a.m. Eastern the next day. And then from here all the way to here, this is regular trading hours from 9:30 a.m. up to cash close at 4, but then we continue officially until 5 p.m., which is the settlement, and then we have the 1 hour pause in between the days. But obviously the volumes that we have going on here in regular trading hours are much larger than what we have here during extended trading hours. And what can we notice from this? This is a 5-minute chart, and you can see the amount of candles we have going from 6 p.m. to 9:30, whereas from 9:30 up until 5, we have less candles. Now, during the day, when I'm day trading the SP 500, I like to use a 3,000 tick chart. So that's 1 new candle every 3,000 transactions. So if I go to a tick chart, this is the same 24-hour period, but now look at the difference. This little area, this is extended trading hours with a 3000 tick chart, and this whole area right over here, this is regular trading hours. So you can see how, based on the volume and volatility, we're going to get so much more detail and candles printed than when there's little activity. Now, you could, if you wanted to trade extended trading hours, just go to a lower tick chart. So maybe you can go down to 300, for example, instead of 3000 like I use for the regular hours. But honestly, I don't really like trading when the market has very little volume activity. Now we do have, if we go back to the 5 minutes, at 3 a.m. Eastern time, we do have the London Open. So right around this time here, this is just the early Asia hours. Some early Asia markets like Hong Kong are opening here. But then when we get to 3 a.m. Eastern time, that's when London and European main markets open. And we do get some more activity here, but definitely 9:30 a.m. when regular stock market hours open right here. That is where you're really going to get the most out of your tick charts, because that's what's going to help you to filter out the most. Okay, so like we talked about, tick charts filters out periods of irrelevant slow market activity, helps you to better use periods of high volatility and volumes, and it's easier to identify price structure. Like for example, right here on the 5-minute chart, we can see we had an open, a push up into the value area high from the extended hours, and then we had a very strong reaction. We broke below VWAP and a very strong move down. But on the 5-minute chart, you can see it's just a series of red candles, one after the other. It's very hard to see some kind of structure here. Now you could say, well, let's just drill down into the 1 minute. And you could go into the 1 minute, which will be this right here. And you do get some better action on the 1 minute. You definitely see more detail, especially in this part that was just one red candle after the other. But you can still, and this is just also just from experience and practice, you know, you get a bunch of like here, like just a bunch of consolidation candles with big wicks or just bodies side to side ranging. Whereas if I go into a tick chart, I feel like the candles look a lot cleaner. The rotations look a lot cleaner. So you can see right here we had the push up into the value area high right here, then the move down, and then here you can see, for example, very clearly this support level broken, and then we had the little pullback here which occurred right at 10:01. If I go into here, you can see that occurred within this 5-minute candlestick, which doesn't really indicate me any possibility of an entry there. And then on the time-based charts, we had the same candle right here, but you can see how with the ticks we had a much cleaner double top pullback right here, two candles side by side right at that level. Another advantage we talked about was the getting better trade entries. For example, here we had some inflation numbers coming, and you can see this is very typical right before a news event. Markets are usually very just range bound, very low activity, and then the news hits. But usually by using time-based charts, you're going to get much later entries, because if you're waiting for a candle to close to get confirmation, by the time you wait for this candles to close, for example, you can see we've already pretty much missed most of this breakout waiting for a candle like this. Whereas if you go into a tick chart, you can see that same event. And again, this is the 3000 tick chart. Even though we are on extended market hours, you can see we have the small candle consolidation, a lot less candles because of the low volumes on the extended hours. But then we do get a huge injection of volume here, and you can compare here from here over to here. It was from 6 p.m. to 8:30 a.m. This part here, this was 6 a.m. to 8:30 a.m. And then this whole movement, this happened within half an hour. So you can see the difference. This is 14 hours of action. This happened in half an hour, but it's just so much more concentrated because of the low volumes. And then when we get big volatility, then that's when we start getting more significant candle prints. And you can see here how you could have gotten in way earlier, because of these candles are, split into much smaller segments, because we're measuring the transactions and we're not waiting for a set number of minutes to pass to close a candle to get confirmation. Here we can see another example how it helped us to filter out low activity, noisy periods. This is a 1 minute chart on NASDAQ futures. And for example, if we see every day we get a huge volatility at the open at 9:30, and then right around 11:30 when Europe closes and we get near 12 o'clock, the lunch hour, volumes start dropping off a lot. They'll pick up right around 2 o'clock again. But for example, you can see periods like here. This was half an hour that price pretty much just chopped mindlessly sideways, 12:30 to from like 12:20 to 12:50. And if we go into a 2000 tick chart, you can see that same period is just this little cluster, much smaller in candles. Same thing over here. You can see the amount of candles that are just drifting upwards here. We got this like tiny candles with very small bodies, just like a creepy crawler up. Whereas if we look at this on the 2000 tick, look how much cleaner this is. And obviously, we're talking about a 1 minute chart. If we put this in a 5 minute, we would have even less details to work with. Okay, so overall, hopefully that brings to light some of the advantages of why I like to use tick charts. Again, they help filter out noise and meaningless low volatility sideways periods in the markets. It is best used during regular market hours. Especially I like to use them in futures because it gives me more detail and price action to work with when there are more periods of market participants and volatility. And when the volumes are low, it is printing less candles, so you get less noise on the charts. Okay, that's pretty much it. Hope you're all having a great week, and I'll see you all in the next one. Take care.